So it's a very, very interesting deal, as you pointed out. And when we just talk about the deal, Pharmeasy, which of course is an online pharmacy player, the parent company of that has gone ahead and acquired a full controlling stake of 66% from the promoters of Thyrocare. This comes in at 1,300 rupees, and probably the market price was slightly higher. So that's why maybe the investors got disappointed. But nevertheless, it's a very interesting deal. 37 times EV to EBITDA is what they are paying, and that's clearly, by any means and any standard around the world, not very cheap price or a great exit price if you are an investor in any particular stock. Also, apart from that, if you just look at the deal, it creates a healthcare platform. So they have a DocCell company. They have Pharmeasy, which of course needs no introduction, and then you have now Thyrocare as well. So it's diagnostic plus doctors plus medicine. So all three under one big health digital platform, and that is of course creating an exciting times. Why this is an exciting deal is also because the online pharmacy place itself has been particularly quite hot. So whether you talk about the Reliance acquisition, whether you talk about Tata's acquisition, whether you talk about the commentary coming in from Apollo Hospital for their digital space, and now with this deal, it particularly gets quite interesting. And that's why it will be interesting to see how it shapes up, what sort of benefits come in, what sort of synergy benefits does get passed on to consumer, which will help people, of course, gain market share in the future.
Absolutely. Pankaj, thanks so much for putting all of that into perspective, and certainly going forward, it's something to study as to how their business plan and business model changes to incorporate those synergy benefits that you were talking about. In fact, what the management also was speaking about when they spoke exclusively to ET Now on Friday. We've got Kunal Rambhia as well as Ashish Maheshwari, who will join us in just a short while. But I want to go to Kunal Rambhia first. Kunal, good morning to you. And we looked at the diagnostics stocks about 3 or 4 weeks back, and at that time Thyrocare was looking quite interesting to both the analysts that we had on board, considering that it is trading at a slight, or at that point it was trading at a slight discount to its peers. How are the charts looking right now? Of course, you had the big event that is dealing quite a blow to the stock in today's session. But what have the charts told you so far, and what are you projecting in terms of the near to medium term?
Morning, Alex. So yes, the counter is in burst right now, and if you look at the trend, compared to the last year, right now we are at almost 3.5 times compared to the previous year price, right? So from 400, we have seen the rally till almost 1450 and 1500 kind of zone. So here the counter is clearly in trend. The chart which I have shared, you can see that the yellow line, which is upward sloping curve formation, which shows that the formation is really very strong. The trend is really on. Look at the volumes. Every uptick has a crazy volume compared to the downtick, which shows the counter is clearly in the hands of the bulls. Now, if I were to find out the target for it, which is trading at the all-time high, I am taking the support of the Fibonacci ratios. The target seems to be, so I've taken the extreme bottom and mid-term bottom of around 400 and 800 to take the target. The first target seems to be around 1600. If that's taken out, then positional target on this counter can be around 2000 levels. So watch out for this counter. Buy on decline can be the best strategy. And if the counter is available somewhere near to 1200, it would be a blind buy.
That is Kunal's take coming in on Thyrocare. We also have Ashish Maheshwari joining us. Good morning, Mr. Maheshwari. What is your take coming in on this big pharma deal that is happening, big deal that's happened in the pharma space, of Pharmeasy actually acquiring stake in Thyrocare? How does this change the dynamics for Thyrocare?
Yeah, in my view, now it's time to book profit in Thyrocare stock. And again, the reason is like what you are showing on graphics. Year till date, stock has already given 50% kind of returns already. And this deal was in pipeline for quite some time. So those investors who have bought this stock for this particular transaction will surely now like to exit. And another thing is what investors were waiting that if they'll get the higher price, what current market price is there. So such event was not there. So again, profit taking was bound to happen, and it is happening. And in my view, Pharmeasy has paid very good price also for Thyrocare because Thyrocare primarily is into B2B kind of segment, and compared to peers like Dr. Lal or Metropolis, which are more into B2C and enjoy higher margins. So in my view, valuations are quite right for Thyrocare, and it's time to exit from Thyrocare stock.
But Ashish, what do you have to say about the argument that you have a new age company that has grown significantly over the course of the pandemic, and a lot of people are using an application? The contention of the acquiring management is that they will create synergies between the existing platform, which is Pharmeasy, and the diagnostics play. And I understand when you're saying that it has been B2B, but going forward, this is a company, Thyrocare, that has provided value for money tests. And if you have that entire ecosystem that is created, don't you think that it's an interesting business proposition for somebody going in for the long term?
Yeah, I agree with you. In long run, it's a win-win situation where you are selling medicines at 20-25% discount. At the same time, you will start offering all these tests also. And in long run, for sure, it's a good strategy to own Thyrocare for Pharma. But my view was that for those investors who are holding Thyrocare stock for this particular transaction, they can look for an exit. My view was that.
All right. I believe that we've got Sandip Sabharwal, who we spoke to a little while back, and he remains optimistic about diagnostic stocks overall. But just to sum up, Kunal says that 1200 would be a blind buy, and Ashish has said that for those who have been holding on, perhaps you can use this opportunity to book profits. But I'm guessing what he also says is that you can buy at lower levels for this counter for the long term. Let's listen into what Sandip Sabharwal had to say.
It's not really happened in India, at least, although overseas it's happened to some extent. And for the Thyrocare management, I think the promoter, it's a great deal because of the way the diagnostic stocks have moved over the last 1 year. So so if they wanted to sell, and then they've got a good deal. For Pharmeasy, they are acquiring something at a high valuation. Now they need to make it perform, and to that extent, I think from purely a minority investor perspective, I would think that it really doesn't change so much. So I don't think people should get too excited, and because the valuations at this point are somewhat stretched. Longer term, we'll need to see how what direction and what strategic initiatives they take to accelerate growth beyond the normal, I think, growth rate in the diagnostic space, which is expected to be 10 to 12%.